Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, December 6th, 2023. So we just saw another try where the bulls tried to gap it up again, and once it hit resistance, it came down. And if you remember from last night's video, I had pointed out this head and shoulders pattern, and we went right up to it. So if this pattern, the way that it's going to play out is that it has to take out the 45.38. If it does, really, if we're just going to measure the exact price as far as if this pattern plays out, hang on one second. So basically what we'd be looking at is a move that would, come on, okay. So that's our distance. So if it breaks through this 45.38 here, hang on, I don't know why this isn't working. Bear with me one second. Okay. So if it breaks through it, really this is your downside target, is going to be right around this, the 44.88 level. So that's just if this pattern plays out. But now if we look at it, we do have support here, so that makes sense. It's a 23% retracement, but like I said, I think it would be healthier for the market if we come down and close this gap and get down to the 44.12. It will really give the just really the technicals and everything that's been just ramped up since the November lows time to breathe. It's also, if you look at it, it'd be pretty close to doing a test of the 50-day moving average and then closing this gap. So to me today, when we gapped up, I didn't really know the rhyme or reason why people were trying to jump in. But as I said, a lot of people are convinced that the Fed's going to start lowering rates, and as I said, they're going to start lowering rates when the economy really starts to throw up. And right now, it's had an upset stomach, but now we're starting to see the unemployment numbers start to tick up, and we're starting to see companies start to lay off, and that's really what the Fed wants to see before they start lowering rates. Because if they start lowering rates, they've been through this before. When the economy was hot and everything was there and they just kept rates low, they're trapped, and they're not going to do that again. I can assure you they're not. And another thing is they don't want to be raising rates in the middle of an election season. So it's one of the things I think they would rather get this out of the way sooner rather than later. And even though I'm still up for the Santa rally, I do believe that that's going to happen seasonality wise. But if it started from these levels here and then came up and we were able to take out these highs, then it opens the door for a move really coming up somewhere up into this 46.38 or possibly even up to the 4,700. I don't believe we're taking out these highs. I just, the economy was, this particular high here was after the Fed, just injected more liquidity into this market. It was after all the, when everything was closed after COVID, and this was your reaction high on it. I don't believe we're getting back up here. We could, but I'm not really worried whether we are or not. Right now, what I'm eyeing down and what would make the most sense, because we have sell signals on the 60-minute chart, we have sell signals on the daily chart, and seeing a breather down to these levels would make perfect sense. I would be getting out of the short positions on the way down, and then from there look to start buying buying the dips on it. But anybody that's chasing right now, if history is going to be our guide, they're going to get shaken out right before the move, the Santa Claus rally starts. Now, most people, I would say a good majority, missed this entire move until we got up here. This is where everybody got really, really bullish on the market, and we just started grinding higher. So when we start, when we get down, if we get down to this 4,400 level, they're going to be bailing out because they're the ones that have been buying the 50-day moving average on the 60-minute chart here, and we finally broke through that. So if we need some follow through, I'm not saying with 100% certainty that we are going to head down to those levels, but for just using common sense and looking at things the way they are, I mean, we haven't had a touch of the 200-day moving average this entire rally, and that's where I'm saying this market's way ahead of itself, and it needs time to digest a 500-point move on hopes and prayers that the Fed's going to start lowering rates. So anyway, we have the sell signals. This is the important, say, support zone the bears need to push through. That's going to be the 45.42, 45.23. If it gets below that, we're going to see probably a very quick move down to the 44.85. And then a lot of times what happens is the bulls will actually buy where the gap started. We had a gap up. This is where it opened. So they'll use that as support, 44.58. And then, like I said, I still think a 38% retracement from the from this move, here would make at a bare minimum would make the most sense. If they continue to try to push it higher, as I said, it's going to end in disaster, just like every other one that the bulls have done this, where they wouldn't leave the all-you-can-eat diner until either they couldn't eat anymore and got sick, or the diner ran out of food. But this is, there's nothing that's surprising about this. We've seen it for the last 2 years, and I think it's the same way. But if the bulls actually do this the proper way, give it a breather, close a gap, then it's gonna give it's say a chance of being sustained rally and possibly going up and testing the 4,800 highs. But to me, that doesn't make any difference. By the time all that happens, we're going to be in and out of trades a lot, and the people that are calling for 5,500 on the S&P, they'll probably be right at some point. Will they be long this market when it happens? Probably not. They really only jump in when the market's going up, and then they go quiet when the market's going down. It's the same old. So anyway, this is the important area for the bears that they need to get through. For the bulls, really, this is it. They're going to have to break above this, the 45.88. If they do, then they'll take out this, and we'll probably head up to the 46.10. But as I said, I still think the most sense is going to be for a follow-through to the downside, shake out some of the weak bulls out there. And if they came out and closed this gap, I think a lot of them would be out, because they're not going to want to run, thinking that this market's crashing, which a lot of people will if we drop 200 points, because they haven't really seen that in a while. So anyway, let's see what plays out tomorrow. Like I said, they tried to gap up and run again. They failed. Now they're below the 200-day moving average on the 15-minute chart. They're below the 50-day moving average on the 60-minute chart. And if you notice from this rally, that has not happened yet. So this is really one of the first times, and the bears really need to follow through if they want to really get the bulls' attention, and we get it down to the 44.12. So with that, have a great night, and I will talk to you guys in the morning.